This is your Wall Street wake-up call. The markets are in a holding pattern waiting for their next catalyst. With me now is George Rusnak, co-head of Global Fixed Income Strategy at Wells Fargo Investment Institute. So George, would you agree with that assessment that the markets are sort of in this holding pattern? There are no upcoming central bank meetings and we're sort of just waiting for third quarter earnings, which are expected to recover a little bit.
Yeah, I think that's right. I think, from a central bank perspective, we had the central bank come out on September 21st and gave sort of conflicting views. Obviously, more dissenters now on the idea of raising rates, and they're conditioning the market that a rate rise seems somewhat imminent and probably more likely towards the end of this year. They meet again in November, but there's no press conference at that one, and December is probably a more likely scenario where they could do that.
And on the earnings front, is that something markets still care about? Because it seems like, at least in the past year or so, that earnings have taken sort of a back seat.
Yeah, earnings drive performance, obviously. I think people are looking towards monetary policy, which has driven a lot of the earnings, and so we're worried about how that's going to happen, impact it going forward. Again, a 25 basis point raise in rates, we don't think will be necessarily very negatively impactful.
All right, but aside from central banks, just because we have no imminent meeting,
right,
there are plenty of other factors that investors are worried about, including, of course, Brexit. We saw the pound continue to decline against the dollar. Yeah. Why are investors so sort of taking this, reacting in this way when we've known Brexit is going to be a factor for the markets for 3 months now?
Yeah, I think what happens is it's an initial reaction of what's going to happen, but the reality is what's setting in now is that this is a long-term impact to the marketplace, and so people are digesting early on sort of the concern about what's going to happen, but the reality is this is going to be phased in over time, so there's a longer tail to this.
All right, so what are you telling clients, because you work on the fixed income side, so how are they preparing their portfolios for not just Brexit, but we also have the upcoming elections here in the US,
right.
So how are they preparing for these factors?
Yeah, and especially with the low interest rate environment, what we hear from clients is just some frustrations around the low interest environment. How do they work in that environment? And what we're telling people is you really need to diversify and actively manage that portfolio. What we're seeing now as far as opportunities or from a diversification standpoint are tips. So Treasury inflation protected securities, we think offer good opportunity because right now there's no inflationary signs right now. We're seeing some potential signs of ticking up. And if that happens, we think tips will perform very well. They've performed pretty well year to date because of their long-term nature, and long-term treasuries have come down dramatically. Going forward, we also like corporate bonds, investment-grade corporates, about 1.4% over treasuries. We think that spread is a good opportunity, and specifically within their financials. But overall, we think it's really important to be diversifying your fixed income alternatives right now.
All right, well, some great advice. George Rusnak from Wells Fargo Investment Institute. Thank you for coming by.
Thanks for having me, Scott.
I'm Scott Gamm, and you're watching The Street.